Tesla is boosting the market. That's our top story today on the Wall Report. I'm your host, Greta Wall. Tesla shares are rallying nearly 8% today after crushing Q1 expectations. The electric automaker reported earnings of $3.22 per share on $18.76 billion in revenue. And that beat analyst estimates on both the top and bottom line. Revenue was up 81% year over year as Tesla delivered a record high, more than 310,000 vehicles in Q1. The company's gross margins also hit a record at 32.9% last quarter. And investors are feeling good about another Elon Musk venture, the Boring Company. The underground tunnel company announced today it has raised $675 million in its latest funding round. That puts the Boring Company's valuation at $5.675 billion. The firm recently won approval to build a 29-mile-long tunnel network connecting 51 stations underneath Las Vegas. The Boring Company says that project will eventually be capable of transporting 57,000 passengers per hour. And meantime, Musk still wants to buy Twitter. A new SEC filing shows the Tesla CEO has secured commitments for $46.5 billion to finance a tender offer for the company. Twitter shares trading flat in today's session amid this news. Musk said he's exploring the tender option after Twitter's board failed to respond to his previous $43 billion cash offer for the company. He committed $21 billion of his own money to this offer, and the other funding is coming from Morgan Stanley Senior Funding, Bank of America, Barclays, Societe Generale, Mizuho Bank, and BNP Paribas. But Twitter's board enacted a poison pill last week, which would prevent Musk from finalizing any tender offer without board approval. That means the two sides must negotiate for this to even have a chance of going through. And the airlines are rallying today after strong Q1 reports. United Airlines surging nearly 12% in today's session after forecasting a return to profitability this year. But the airline's Q1 performance was weaker than expected. The company reported an adjusted loss of $4.24 per share on $7.57 billion in revenue. United, though, forecast its cost, excluding fuel, will rise 16% in 2022, Q2 rather, compared to Q2 of 2019. The airline said it expects to fly 87% of its 2019 schedule this quarter. And American Airlines shares are also jumping more than 6% after forecasting it will turn a profit this quarter. The airline also did better than expected back in Q1. American reporting an adjusted loss of $2.32 per share on $8.9 billion in revenue. That was better than analyst estimates on the top and bottom line. American said its revenue in March surpassed 2019 levels for the first time since the pandemic began. The company forecast Q2 revenue up to 8% higher than it was 3 years ago and said it expects to fly 94% of its 2019 schedule this year. And Netflix shares are continuing to fall today after the streaming giant suffered its largest one-day drop since October of 2004 on Wednesday. Shares down nearly 6% after investor Bill Ackman dumped his entire stake in the company. Ackman's hedge fund Pershing Square purchased more than 3 million Netflix shares back in January, but the firm sold off that stake Wednesday at a loss of about $400 million. Ackman said Pershing Square has, quote, lost confidence in their ability to predict the company's future prospects, and referring to Netflix. And while Netflix is losing subscribers, other streaming platforms are growing. Remember, this is something Netflix said is part of its problem, increased competition. HBO Max added 3 million new subscribers in the first quarter. That brings the company's total to 76.8 million, up 12.8 million year over year. Netflix again cited increased competition as part of the reason for its surprise drop in subscribers last quarter. And taking a look at the economic news of the day today, weekly jobless claims to come in a bit higher than expected as the labor market continues to tighten. Labor Department reporting 184,000 Americans filed initial claims for unemployment benefits last week. That was down 1,000 from the previous week and above economist expectations for 180,000. Continuing claims, though, fell by 58,000 to 1.417 million in the week ending April 9th, which was better than expectations. The U.S. labor market is nearing full employment levels as businesses continue to struggle to find qualified workers. And now the market is focused on Fed Chair Jerome Powell. He is set to participate in a debate on the global economy at the International Monetary Fund in less than an hour. And Powell's speech comes after several Fed officials have talked down the possibility of doing anything dramatic to tame inflation this week. But CME Group's FedWatch tool shows 97.6% of traders expect a 0.5% rate hike at the May meeting. Let me know your expectations in the comments. We're about 2 weeks away from that meeting, a little less than 2 weeks away. And I'll see you all back here for the Wall Report tomorrow at noon. Be sure to give this video a like before you go.